Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. Welcome to another dividend investing video. In this video we are going to dive in and take a look at an oil company that can be a solid option for long-term investors to look at, to possibly add into your portfolio. This company has an impressive resume of rewarding dividend investors for 151 years. Guys, that is ridiculous. 141 years. They have also been consecutively increasing their dividends for over 40 years. Many analysis has this company forecast of 27% upside. The company is expected to generate $100 billion in excess cash flow between 2022 and 2027. It is rated as a buy for now. So, can this be an opportunity for you to buy this company, or should you wait and see if there's a better entry point? As always, please remember that this is all not financial advice. This is just me sharing. So, with that said, grab your drink, sit back, enjoy the video. Do me a favor and hit the like button, hit the subscribe button, and hit the notification bell. Without any more delays, let's take a look at this company. So the company that I'm talking about is Exxon Mobil. The ticker symbol is XOM. This is a company that engages in development and distribution of oil, gas, and petroleum products. So most of you guys know about this company. You probably use their product when you do go get your gas. Now if we go to some of the information on the website, you can see some of their information on how they are uniquely positioned to meet the world's energy and reduce emissions. You can see some of their key topic stuff such as fortress balance sheet, high return investment, industry leading ROCE, and then you got growing shareholder distribution, diverse portfolio. Just some of the key highlights in there. Now if we go over to their PowerPoint presentation, you can see earnings have 11 billion, debt to capital ratio about 17, cash flow operations is about 16.3 billion, and then you get your shareholder distribution of 8 billion, including 3 billion in dividends. Look at that. Wow. Now let's swing over to Simply Safe Dividend. Looking at the dividend safety score, they rated as safe with the 80. The dividend yield is about 3.54, and it is a market cap. Now looking over at the key metrics, you can see payout ratio is about 24, which is low for oil producers. Forward payout ratio is 41, which is a little bit higher. During the recession, they've increased their dividend. Again, look at this. Just outstanding dividend streak of 141 years without a reduction. If you look at the dividend growth, the last 20 years, not as much as I would like, but it is still 7% with its average. Last 5 years have been slow in 3%, and then the latest is pretty much similar. And then uninterrupted dividend streak of 141, dividend growth of 40 years consecutive increases. If you want to know when you're going to get paid, you get paid quarterly in the months of March, June, September, and December. Your annual payout will be $3.64 per share, and your ex-dividend is May 15, which has passed. Now looking at the timelines, based on Simply Safe Dividend, they feel that it is overvalued. Now if you look at the PE ratio, 11 versus 12 for energy sector financials. Here we go. Free cash flow per share, sales growth, and then you got your total sales in billion, outstanding sales, and then you got return on investment capital. You can see it has increased the past couple years, and return on equity has also increased. Now if we swing over to Seeking Alpha, looking at the dividend scoreboard, you can see here safety is a B, and then your yield is a C, consistency is a A. Looking at the dividend summary, dividend yield is 3.40, annual payout is about 364, payout ratio is 24, and then you got your 5-year growth rate of 2%, dividend growth of 20 years. Now, looking at the dividend grades, as you can see right here. Now, if we continue to look at Seeking Alpha, there was an article that says, where will Exxon Mobil be in 5 years? This was dated in April 1, 2022, and then this is the Val petroleum. Now, in this summary, they talked about how Exxon Mobil should at least double its bottom line in cash flow in 5 years. Exxon is expected to generate $100 billion in excess cash flow between 2022 and 2027. It is still rated as a buy, and then you can see a lot more information as you read this thing. So definitely, if you get a chance to read this article, read it so you can get more information in it. Now, if we swing to tip ranks based on their smart score, they rated as a 5, which is neutral. You can see moderate buy as an analysis. Hedge funds have decreased their shares last quarter, and then you got your inside transactions showed shares. 5-year performance is in the 67. Now, if we go over to more analysis forecasts based on their analysis, they're rated as a buy. 6 buy, 4 holds, 27% upside to about 131, with the high of 145, the average of 131, and then the low 118. Now, if we swing over to simply Wall Street based on the share price and fair value, this is their estimate using what they call the discount cash flow model. Their fair value rated as about 121. Currently, at the time of this video, is about 102, and they calculated that as a 15% undervalued. Now, if we swing over to stock Rover, based on their analysis, they rated as a buy, about 7 strong buy, and no holds. 10 holds right there. Now, if we go over to the industry risk and return, I wanted to again look at the performance based on the S&P 500 as well as the industry. You can see the 3-year return has been really great, 173 versus the S&P of 45. But then it has gone down to the 5-year return of 62 versus the S&P 500 of 75. The industry is about 30. Now going over to BarChart, based on their valuation, which is right here, they rated as undervalued 2%. XOM's price is 2% under its historical valuation. And then based on their rating, it's a neutral. You can see their above average value score. Now going over to BarChart, based on their analysis, you can see from their snapshot opinion, it's basically a sell. Now the overall is a sell. If you look down on it, it's pretty much overall it's a sell. Yeah. Looking at the support and resistance, so if you want to put these into your notes and see where it falls, you can see the levels of support as well as the levels of resistance right there. One of the things that I also looked at, and you can check this out on Yahoo Finance, Exxon sees Q2 profits falling over natural gas. If you watch the video, it talks about how they expect profits to fall because of the natural gas prices. So that's something for you to consider if this is something that you would like to put a position on there. Well, that's about it, guys. As for me, I think it is a really solid company. I do expect some sort of a dip in the next couple of maybe this quarter, but I think, in my opinion, if you're looking at it in a long-term perspective, I think this is a solid company to invest on. If you're looking for an oil company, this would be one for you to even look at. Another one would be Chevron and other Oxy, OXY, which is Warren Buffett's oil company. So thank you so much for watching. Hope you liked this video. Do me a favor and check out the other videos as well. With that said, stay cool, keep investing, guys, and I'll catch you guys on the next video. Right, take care. Aloha.